Cryptos are fascinating because of their ease of access and speed of exchange. Central banks can see that cryptos are attracting a growing number of users, so they have come to want their own digital currency, at least in theory. But if you think about it, what is a crypto trying to do above all else? Basically, the great promise of cryptocurrency is the disruption of the banking system. A crypto is a money-like value that moves over the internet rather than through banking networks. It is important to understand that when it comes to money, there is what is legal and what is regulatory. The legal is imposed by the law that applies to all of us, while the banking system regulations apply to banks. When you use crypto between individuals or via exchanges, a lot of banking regulations don't apply. So, have the central banks understood this fundamental change? And do they really have the will to blow up the banking system as it exists today? Come on, let's go. Let's start by asking ourselves a question that is rarely asked. What is the purpose of a bank? Basically, the banking system is essentially an oligopoly with very difficult access, where a small number of duly authorized companies have the right to mint money, open accounts, and be part of the inner circle of real banks. The status of the bank is so ingrained in our habits that there is even a right to have a bank account in a large number of countries. Then, the banking system justifies this privilege of protection by the government thanks to services rendered such as payment management, loan management, and other financial services. The concern is that these services are of a very poor quality technically, and that little by little the banks have built a legal fortress that allows them to exploit more and more the information they have on their customers for their own benefit. The cronyism between bankers who have money and the world of politics has ended up creating a very profitable sector for a small minority who profit terribly from it. The counterpart of this situation of rent for this sector is that governments hold the banks just as much as they are held by banks, because governments indirectly force the commercial banks to finance them. This duo between the banking system and the state ends up resembling a highly inbred marriage that poses enormous democratic problems. As for the services rendered in the internet age, they are evolving very slowly, but are terribly inefficient compared to what we could do with the technology we have. In short, it is a fossilized and gangrenous sector. If it were to explode due to technological innovations, I would not be the one to cry in despair. In this context, I fully understand that cryptos worry the banking sector, governments, and central banks. However, what I'm starting to find very interesting is the stated taste of central banks to develop their own digital currency to compete with cryptocurrencies. What does this mean in essence? A central bank digital currency? Rest assured, it is not a way out that will allow you to escape government control of the currency. Quite the contrary. A CBDC, central bank digital currency, is simply a bank account directly at the central bank as opposed to an account at a commercial bank. Basically, it will not go any further than that, because I am willing to bet that these CBDCs will never be decentralized with consensus government rules on the network. As for the regulatory obligations, they should certainly not decrease. On the contrary, because your central bank will have total access to your financial information, you won't even need to ask your banker friend for it anymore. A CBDC summarized in one sentence is a current account at the Fed, or at the ECB, or at the Central Bank of China. So yes, it will surely be more efficient in terms of payment technology because it is hard to do worse. But if we push the reasoning, does it mean that we will have bank cards issued by the Fed, or that the ECB will offer you home loans? How far will central banks go into the banking business? How much fun will the banker buddies find CBDCs? Keep in mind that deposits in a traditional bank are the lifeblood for all other services. And now, Morgan Stanley tells us that CBDCs could suck up to 8% of bank deposits and transfer them into central banks. On the other hand, the interest for individuals is obvious. The money deposited in an account at a central bank will protect them against any risk of a bank failure by pushing the risk to the government. Moreover, in the economy, there is no more kosher than central bank money. Having your money in CBDC will guarantee that it will be accepted everywhere. Oops. That could cause some small problems, as I'm not sure the central banks are up for breaking up the banking industry. Also, don't forget that commercial bank executives are a ubiquitous decision-making link in central banking. The Fed, in the USA, is an organization managed by both the public and the private sector via commercial banks. As for the ECB, it is more or less the same principle. It is a public structure whose shareholders are the member states of the euro, but there too, private banks occupy the vast majority of seats in order to guarantee, in theory, the independence of the ECB from the government. As a result, I'm beginning to understand why CBDCs in the US and Europe may not see the light of day right away. There might be a delay. But then, what about China? It's true that they do not have a CBDC, the e-yuan, which is being rolled out in stages throughout the country. It's true that they do have a CBDC, the e-yuan, which is being rolled out in stages throughout the country. Why does it work there and not here? Does China want to kill its banking system? Of course not. However, unlike the USA and Europe, it is not the private banks that own the central bank, but the state that is very influential in the private banks. My opinion on the subject, and these are not certainties but my opinion, is that China's ambition is to prioritize a strong yuan above all others, which will be able to chase the dollar out of its zones of influence for good. Thanks to the financial center of Hong Kong in particular, that is the absolute priority. Moreover, the Chinese banking and financial system is far from being as developed as the USA and Europe. This industry is recent compared to the West, so my opinion is that China, which sees the problems of the West with its financial system, has decided not to fall into the same trap. They will therefore separate the functions of the currency between the management of assets that will go through the e-yuan and the management of financial services that will go through private intermediaries. Are private banks happy with this strategy? I don't think so. Are they being asked for their opinion? I don't think so either. That's the lesson of Jack Ma's very personal experience. With his company Ant Group, which owns Alipay, he wanted to operate credit outside the banks. This strategy, which did not please the government in power, led him to disappear for 3 months, only to come back with a much more moderate opinion, close to the government's opinion on the matter. This is the difference with China. The power in place is able to impose a strategy on private players. Not only does the autocratic dimension of power allow it to do so, but the financial and banking system is much less developed, so that politics still has a hand in these structures. So, the existence of a CBDC in China does not shock me, but as far as the USA and Europe are concerned, I think we are not on the same deadlines. On that note, see you soon for new videos. Ciao.
Thank you so much for watching. If you like my videos, please subscribe and don't forget to hit the bell if you want to be notified of the next episode. And if you want to invest in the stock market over the long term or diversify your financial portfolio, I'm offering you an analysis of the 8 European star stocks to have. Thanks again for watching and have a great day.